Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to look at a topic of picking tops and bottoms, because I know many technical gurus say that this is very hard to do and it's not advisable, but it's okay as long as you have the correct tools and you're looking to pick highs and lows that fall at large degree support and resistance. In fact, it's no riskier than actually picking trades mid-trend, because we're using correct position sizing to keep our initial risk small. So I want to look at a couple of examples here on some different markets to show you what I mean. And in fact, actually, for you guys who've been following these videos for a while, you'll know that this is exactly what we've been teaching about multi-time frame analysis, and you'll see from other videos that we've picked the highs and lows of the days quite often as well. But let's have a look at a daily chart just as an example, and on a Forex chart, because I don't look at Forex very much, even though a lot of our customers, our MTPredictor customers, follow Forex. Here's a daily chart of the British pound, and you see it's been declining nicely for about the last week. But the setup I'd like to look at was this automatic DP sell here. So you can see this is pretty much calling the high of the recent move up into the 18th of June. So it's calling that high pretty nicely indeed. Now, why would we want to try and take a trade like that? Well, the reason we'd like to take it is if it fell at larger degree support or resistance, in this case resistance, because we're looking for a high. So for this we go to the larger time frame chart. So from a daily chart we move out to a weekly chart, and for this we then go back to the prior swing pivot, which you can see would have been here, which would have been the week of the end of February here. We right mouse click, place our DP level on the chart, and that gives us an area in advance. Remember, these levels are on the chart in advance, an area of where potential resistance in this case was likely. You can see the market came up, came down, and has made a second attempt at that same level there. If we go back to the daily chart, we can see how this looks. And there we are. We can see there's our first attempt at the weekly resistance, and here's our second attempt. Remember, we don't look at a breach of the higher time frame resistance on the shorter time frame chart. So here it may look that this DP sell had gone beyond the weekly chart, but we look at the weekly chart to see whether the market is going beyond that, and here you can see it quite clearly isn't. In fact, the week of if I zoom in a bit, the week of 19th of June made one close beyond the level. The next week here, which was the week ending 26th of June, the market snapped back quite convincingly. In other words, snapped back straight back into the level. So this can quite often happen like that. So if you're just beyond a level on the time frame you're trading, which is the shorter time frame daily chart, then that's okay, because you need confirmation that the market is going to snap back on the weekly time frame. So this would be a good trade to take. So let's have a look at this setup and see how it's unfolding. There's our red sell bar. We right mouse click, do the analysis, and this would then give us our target, which is down here at around the 150.74 level. If the market got down here, remember we use correct position sizing, that would mean a potential profit of almost 8R or 7.9R risk units. Remember, our risk is related to our initial stop, so our entry and initial stop then keeps our initial risk small under control. In other words, we use correct position sizing to vary the number of lots, in this case because we're trading Forex, to keep our initial risk small. In this case, less than 2% of a sample $20,000 account. We don't know whether the market will get there. All we know is that if we were stopped out, that would be a -1 R loss. If it makes the target, that will be a potential plus 7.9 R profit. But you see how it's possible to do this because you were falling in and around the area of higher time frame resistance. So let's see how the British pound does over the next few weeks and months. If you were worried about this, because we're past the 100% initial risk level here, you could bring your stop to break even and therefore protect your trade. So that's a nice example on a Forex chart on a slightly longer time frame, a daily and a weekly. In fact, actually, I just want to have a quick look at this DP buy down here, because this would have been really good as well. There'd be our DP buy. You could have trailed with your ATR stop and come out for a very nice profit indeed. So I'll quickly look at the weekly chart on this, put the weekly resistance weekly support in this case on from there, and there you can see exactly the same thing as it had a first attempt here. Zoom in a bit. It then made another move lower. There it closed below for 1 week, but then snapped straight back again for the next week, and therefore provided support at that level as well. So that means that would be in a good area to find support. So in other words, that would have been a good buy setup as well on the daily chart, which, as you can see, whoops, would have actually come down to that low very nicely. Right, let's just clear that all off, and let's go to our a different chart, the ES. Now on the ES, I want to have a look at this DP sell here yesterday, and as you can see, that actually nailed the very high of the day there. So was this a good trade to take? Well, let's go out to the 15-minute chart, which is the higher time frame chart. Let's go back to the prior swing pivot high, which would have been here. Right mouse click, do DP, and there's our 15-minute resistance. And as you can see, that caught the high of the day very nicely indeed. Remember, we're not looking at exact levels when we go down to our shorter time frame chart. We're looking to see whether the market will breach on the same time frame as the DP is on. So in other words, the higher time frame, which is the 15-minute in this case. Let's go down to the 3-minute chart, and there we are. There's our DP sell, catching the very high of the day very nicely indeed. Do our analysis into the first target for a nice 2.4 hour profit. This was also a VSA setup. Whoops, sorry, I didn't mean to print that. Let's just refresh that. Sorry about that. Hit the wrong button there with my mouse. Let's go back to the 3-minute chart. There we are. This was also a VSA setup. What do we mean by that? Well, if we zoom in, this bar here that went out to make new highs above the previous high here was on our was a red VSA on our volume indicator here. That indicated an unusually high volume. That one there, sorry. The market then reversed at DP resistance. That was indicating that professional selling was coming into the market, and also that the market was likely to decline. So there's another reason why you'd actually like to take this trade here. Then that might be a reason why you may not have decided to come out at the first target. You may have trailed with our ATR stop, which is our red dots in this case. If you had, you'd have come out about here for a nice 3.7 hour profit. But either way, another example of catching the very high of the day or the very high of a turn there. So there you go, two good examples, or two good recent examples from yesterday on the US E-mini, the ES, catching the high of the day there with a DP sell on the 3-minute in and around 15-minute resistance, also a VSA setup, and also a recent sell setup on the British pound, where we came in at our DP sell as of the 18th and 19th of June because they were at the weekly resistance area on the weekly chart, as I can see there, the DP weekly resistance. So a good example of how to catch highs and lows using the MTPredictor software program, but only doing it when you're at higher time frame support and resistance. In other words, trying to catch the end of a trend without that is like standing in front of a train. It's really dangerous to do indeed. So we only do it when we have other reasons, for example, higher time frame support and resistance. So hopefully this has been a good example showing how to do that with the MTPredictor software program on a couple of different markets, the British pound on a daily chart and the ES on a short-term chart.